Welcome, finance leaders. If you're managing a restaurant group that spans multiple locations, brands, or ownership structures, you already know this isn't just bookkeeping, it's orchestration. For hospitality groups with 10 or more units, the complexities multiply exponentially. Multi entity accounting means tracking separate legal entities, keeping intercompany activity clean, consolidating without double counting, and comparing performance across brands and regions with confidence. Whether you're a director of finance, CFO, multi concept controller, or VP of finance, today we're diving deep into the critical backbone that separates thriving restaurant groups from those struggling with financial chaos. We'll unpack the moving parts, from intercompany eliminations and standardized reporting to the systems and teams that make growth sustainable. This is your practical, visual playbook for mastering multi entity accounting. Here's the question that keeps restaurant finance leaders tossing and turning at night. How do rapidly expanding restaurant groups maintain financial clarity and control when operating through dozens of separate legal entities? Three forces strike at once. First, rapid expansion. New units spin up as separate entities for liability, tax, and operational reasons. Second, intercompany complexity. Commissaries, shared labor, and group funded marketing weave transactions across entities that must be eliminated on consolidation. Third, legal and tax nuance. Different calendars, different rules, same need for a single, trustworthy story. Consider this: you're not just managing one restaurant, you're overseeing multiple brands across different locations, each with its own legal structure, tax obligations, and reporting requirements. Each brand, each location, each entity creates another layer of financial complexity that must be tracked, consolidated, and reported accurately. Your close speed, accuracy, and comparability ride on getting this right. So the problem is clear. But here's what makes it even worse. Traditional accounting methods, the ones that work fine for single location operations, completely crumble under the weight of multi-entity complexity. Manual spreadsheets buckle under intercompany eliminations and multi-entity consolidations, leading to errors and countless wasted hours. Inconsistent charts of accounts and varied POS setups make apples-to-apples comparisons impossible. Policies drift by location, so expense coding, approvals, and deadlines differ just enough to derail reporting. Think about a central commissary selling fresh ingredients to multiple restaurant locations. Without proper systems, these intercompany sales create massive revenue and expense mismatches. You end up overstating your financial position, making critical expansion decisions based on flawed data. Data integrations are partial or late, leaving teams to copy-paste, chase managers, and rebuild schedules every month. The gap between what you think is happening financially and what's actually happening can be absolutely devastating to your bottom line. But what if I told you there's a proven way to turn this chaos into clarity? The winning pattern is a purpose-built three-pillar approach designed specifically for hospitality. First, invest in restaurant-specific accounting software, or ERP, that integrates POS, payroll, and inventory, automates eliminations, and consolidates across entities in near real time. Leading finance teams are adopting platforms like Restaurant 365, NetSuite, and SAP ERP. Second, staff it with experienced accounting teams who are fluent in hospitality KPIs and POS to GL reconciliation, people who understand the unique pulse of the restaurant industry. Third, lock it in with standardized policies and procedures. A unified chart of accounts, clear close calendars, approval workflows, and an intercompany policy that mirrors entries and eliminates them reliably. This three-pillar approach creates a financial command center that handles intercompany eliminations automatically, generates consolidated financial statements in real time, and maintains separate entity tracking for compliance. The result? Finance leaders finally have the visibility and control they need to drive strategic growth instead of just fighting fires. Sounds promising in theory, but does it actually work? Let me show you undeniable proof from industry leaders. When the playbook lands, the numbers tell a new story. Take a fast casual chain with 75 plus locations. Their director of finance moved the close from mid-month to the first week, while weekly flash reports make labor and food costs visible store by store, with automated reporting tracking sales, labor, and food costs per location. Consider a multi-brand group operating 130 plus restaurants across concepts like RPM Italian, Wildfire, and Beatrix. Their multi-concept controller standardized the chart of accounts, automated eliminations for commissary and shared services, and finally compares concepts apples to apples across regions with seamless consolidation. And a franchise operator with 100 plus units enforces uniform data submissions, automates royalty and rebate tracking, and keeps corporate AP and payroll tight with real-time reporting. Across the board, close speed improves, accuracy strengthens, comparability becomes routine, and leadership gets a cadence of decisions that match the pace of the business. These aren't just case studies, they're blueprints for financial mastery that you can follow. The implications for you as a finance leader are absolutely transformative. Here's how it plays out on the ground. In a single brand, multi-location setup, the director of finance enforces a common chart of accounts, tracks internal transfers like commissary to store movement, and guarantees on-time, accurate reporting for leaders and investors. In a multi-brand group, the multi-concept controller harmonizes charts, consolidates by concept and total group, and delivers brand-level insights that drive menu, labor, and marketing decisions. In a franchise environment, the VP of Finance standardizes franchisee submissions, reconciles royalties and rebates, and runs corporate AP and payroll with automation. Each structure looks different, but all share the same backbone: integrated systems, consistent policies, and dashboards everyone trusts. By implementing these multi-entity accounting best practices, you gain unprecedented visibility into profitability across every single entity in real time. You can outsource specialized functions like accounts payable processing and reconciliations to streamline operations. Most importantly, you shift from being a reactive number cruncher to a proactive, strategic advisor. Imagine having a dashboard that shows not just consolidated numbers, but brand-level performance insights, regional comparisons, and predictive analytics, all updated in real time. This isn't just about better reports, it's about fundamentally changing your impact on the business. That's powerful, but we're just scratching the surface of what's possible. The resolution is a fundamental paradigm shift. Finance moves from reactive fire drills to a run-ready operating system, from fragmented reactive bookkeeping toward a unified, proactive financial strategy. Standardization replaces variation. Automations post, mirror, and eliminate intercompany entries reliably. Integrations stream POS, payroll, and inventory into a single source of truth. Closed calendars become commitments. Weekly flash reports for action, month-end for precision. Specialized work like AP processing and reconciliations can be automated or outsourced to raise quality and free your team for analysis. Layer in anomaly detection to flag labor spikes or outlier COGS as they happen. The future belongs to organizations that view multi-entity accounting not as a necessary evil, but as a strategic weapon for aggressive growth. This means investing in scalable technology that anticipates your next acquisitions, creating standardized processes that make onboarding new brands completely frictionless, and building expert teams that understand both GAAP principles and restaurant operations intimately. The finance leaders who thrive tomorrow are those who build systems today that can handle 200 entities as easily as they handle 20. The result is clarity you can manage to, and a platform investors trust. Multi-entity accounting transforms from a back-office function into the engine that drives strategic expansion and competitive advantage. As we reach the end of our journey through multi-entity accounting mastery, let's lock in your path forward with a simple action checklist. 1. Audit and harmonize your chart of accounts so entity differences don't block consolidation. 2. Map integrations from POS, payroll, and inventory into a hospitality-ready accounting hub. 3. Write and enforce an intercompany policy with mirrored entries and clean eliminations. 4. Define dashboards and a reporting cadence. Weekly flashes for action, monthly closes for accuracy. 5. Pilot with one region or brand, then scale what works. We started by acknowledging the overwhelming complexity facing restaurant groups with multiple entities. We identified exactly why traditional methods fail and revealed the breakthrough three-pillar solution: restaurant-specific technology, experienced accounting teams, and standardized policies. We saw undeniable proof from industry leaders managing 75, 130, and 100 plus locations. We explored the transformative implications for your role and the paradigm shift towards strategic financial leadership. Whether you lead a single brand network, a multi concept portfolio, or a franchise group, the playbook is the same: standardize, integrate, automate, and govern. Don't let financial complexity hold your restaurant group back from reaching its full potential. Embrace multi entity accounting as your pathway to clarity, control, and strategic growth. The tools exist, the processes are proven, and the expertise is available. Your journey from financial chaos to mastery starts right now. Connect with Forks for the experienced accounting professionals your restaurant needs. Details in description below.